All right, guys, what's going on? This is Ryan, aka Kenter and Clark, and on behalf of my partner Josh Rager and I just want to thank you for tuning into the BlockRoots YouTube channel. We appreciate all of our subscribers, all of you who leave comments, likes, and dislikes. And just as a reminder, as long as you are a subscriber to the YouTube channel, if you leave a comment below, so just go ahead and click subscribe. If you leave a comment below, we're going to be automatically entering you in to win $100 in Bitcoin. So at the end of this video, I'll be selecting the winner from the last video, and we had about 296 comments. So we're going to be selecting a lucky winner from this. And just as always, as a reminder, it's not a contest. So there is no comment that we're looking for in particular. We don't need just positive feedback. It's a random drawing. So we're going to do that at the end of this video. And this is a really funny video because I actually did this video about 25 minutes ago. But at the end of the video, when I played it, I recognized there was no sound because I had unplugged my mic to charge something else in to the cord that my mic was using. So we're going to have a little bit of fun. I'm going to laugh at myself. And we're going to go over what I think are a few important things. We're going to go over another tool that I think is really valuable. So a tool that I think is especially valuable in a time like this. We're going to go over something that I'm going to be doing at the end of the month that I think everyone should take advantage of. And then lastly, we're going to go over an asset that I think is still going to be outperforming for the next few weeks. So first things first, all right? Nothing has changed in the last month and a half, 2 months. Price has been stuck within a range. Now, defining a range is pretty easy, right? We have two extremes, two levels that have over time served to reject any kind of advance, whether it was upward or downward. So we're just going to go ahead and place those levels on right now. So we're going to say, the highest close and then, for example, the lowest close. So we'll do just on a weekly candle chart. So the lowest close and the highest close. And very simply, now we have some idea of the range we've been working within. Now, my specific approach takes a little bit more into account than just where we've closed, right? Some people will use a 4-hour chart to get a bit more of a granular view of things. Some people will use a daily chart, a weekly chart. A weekly chart, I would say, carries a tremendous amount of weight because there are so many other people that are basing their signals off of this. So if you are fading changes on the weekly chart, you're fading the flows of every kind of trader you could think of, from intraday traders to position traders. So weekly chart is a really safe bet to go with. Now, with a range, we have our structure that qualifies it as a range, right? There's certain behavior that qualifies it as a range, though, too. Now, ranges are characterized by balance. We could say with some level of certainty that if you're coming off of a really strong move, maybe this consolidation is going to lead to continuation. Okay, we could look at volume within the structure to say, all right, was most of the volume transacted at the low and now we're more towards the high? Or was most of the volume transacted at the high and now we're more towards the low? And from that, we could start saying, well, maybe one side is in more control. Over time, though, if we continue to favor the midpoint of the range, what we're saying is that the midpoint of the range is essentially fair value. And over time, when you continue to move through time sideways and continue to transact at that level, you're going to be establishing that as the high volume level. That will become the point of control more often than not. So if we look at this structure right now, we're going to see that the point of control is right at that center. And that is because we've spent the most amount of time here. So we're going to go ahead and open this up and you'll see the point of control, which is where most of the volume occurred. I wouldn't get too hung up on this specific line. It's a general area. We could see that there is a high volume node that's favoring the center because that is the midpoint of the structure. So our ranges are defined by a few features. Very clearly, first and foremost, are the extremes, right? The low that rejected price movement, the high that rejected price movement. And when you're trading a range, you should be trading it when it's defined more clearly because you're going to have to imagine that ranges are far more easy to define in hindsight. But if you're anticipating a range forming, you're going to be trading it with some type of mean reversion strategy or some type of mean reversion approach. So you're going to be selling resistance, selling the high, buying support, and you're anticipating a return to fair value. So you're actually anticipating a return to the center, which makes getting involved at the center kind of contradictory because what you're saying at either extreme, so at the high and at the low, is that is where price is out of balance, okay? And that when it returns back to the center, that's where it's in balance, where it's in most agreement. So when you're taking a position off the center of a range, it's sort of like you're saying that everyone else has it wrong and that buyers and sellers again, have it wrong, and that the area where buyers and sellers are in most agreement is a good area to get into with expectation that it's going to leave there with any amount of certainty, either upward or downward. So it's just it's a poor decision to make to get involved at the center of a range versus getting involved at either extreme, at either the high or the low. Now, this is an area that might be more beneficial to get involved earlier on as you're establishing the beginning of this, when it carries more weight, when you're going to see more of a level of response there. But as price moves sideways, this area just becomes a lot more, as I say quite often, listless. All right, there's a whole lot of inactivity at that level. And we're waiting for price to choose the next direction in an impulsive fashion. So much like physics, you go from a period of highly kinetic to potential energy, and we're compressing in a way that we've only compressed a few times over the last 2 years. What we're looking at is back in ultimately September 2019. Then we're going back to March and April of 2019, and then all the way back to November 2018. So 2019, 2018, these were before major breaking points. We have the same level that we've had in volatility, and if you use something as simple as a Bollinger Band, which is a 20-period moving average with 2 standard deviation bands, you can see how tight it is. So we define a range by the most obvious features, which are the extremes, right? The structural points, so the high and the low. And if I'm looking at a range, I'll probably do some type of compression of my TPO chart over the course of those weekly TPO charts to get a more, again, granular, contextualized idea of where we've distributed through time, how that has changed, how we've migrated with value, or rather where value and point of control has migrated over time. But you're accomplishing the same sort of thing if you're using the weekly as well, to a degree. Now, one thing that a range is characterized is, like I said, it's characterized by balance. So what we can say is that over time, there will be these normal expected behaviors at the highs and at the lows. And if I'm trading a range, there are some times when I'll be selling support. There are also some times when I'll be buying resistance, and that's because more often than not, I will have calculated certain expectations, or rather through the calculation of certain values. These are just basic statistics, or you don't need to know much more than a basic statistics 101 class. That was a little sticky in my mouth, to compare how we are behaving when we approach these levels again. So just to clarify what this means, if I know that previous levels have showed signs of absorption and have shown significant signs in volume and delta, then when we approach these levels again, I have sort of a baseline to go off of to compare the new approach to. So if we see that we're approaching resistance again at 97.50, and we're not seeing the same levels in delta that we had previously, rather we're seeing an increase in them. We're seeing not so much of a sign of absorption, and we're actually seeing an increase in volatility and volume through this level. Well, then I know that this is standing out compared to previous interactions, and maybe this is a time to be buying resistance rather than selling it. That might be a little bit more complex. That might sound like a mouthful. Trust me, it's not that difficult. The execution part is the difficult part, right? Reading these values and interpreting them, it might be difficult, but it's a lot easier than actually placing the trade and sitting on behalf of expecting that, or rather sitting behind that, hoping that over time that sort of behavior plays out in your favor, right? The law of large numbers hopefully plays out. Reading these values, establishing these statistics is not that difficult. The one thing I want to get into is the tool that I think is very useful, that is available to all of you, because that's one thing. The TPO charts are not available to everyone. If you use TradingView, this ATR tool is useful, and it's available on the free version. And ATR is the average true range of price movement. So what we can see on the daily chart is that the ATR over the last 14 period, this is a 14 rolling period. So if we're looking at the daily, it's a daily ATR. If we're looking at the 4 hour, it's a 4 hour ATR based on 14 periods. So what we see is that the daily ATR is right around 200 between, right now it's right around 200, but over the last few days has been right below 250. So the average expected movement for a single day has been around $200 to $250. Okay, what this allows us to do is establish norms. So now we have sort of this baseline to compare new behavior to. So if over the course of a day, we move half of that value, doesn't really stand out too much, right? If in the course of a 4 hour candle we move $100, that's not really that significant. That's half of the day's ATR. That's a 4 hour period, right? That doesn't really stand out. If now within a range, Because when we're paying attention to a range, we want to see that volatility increases through the range. So if you're looking at the high and looking at the low and looking to whether or not to substantiate a case for the next break at high or low, being the final break, you want to see an increase in volatility. Ideally, what you want to see at the beginning of any kind of move that is going to take us outside of this range is a massive increase in intraday values that only appear on the daily range. So for example, the daily range is, let's say, $250. If we get a candle that's $350 on a half-hour candle, right, or a 4-hour candle even, we know that that's significant. It's worth paying attention to because we know over the last week that $250 is the average, right? So our ATR is 250. We have some type of expectation moving forward to what we could compare new values to. So we could say, all right, if we have a multiple of this value, so if we have a multiple of that of 2, so let's say we have a half-hour candle that covers $400, covers a $400 range, well, that's 2 times the daily ATR, and that is quite significant and probably worth paying attention to. So when we're paying attention to a range, not only are we paying attention to the high and the low from a structural standpoint to validate that range, but we're also paying attention to the behavior that we're saying is the normal behavior for that range. So especially during a time like this, when you are looking at extremely compressed price action, anything that is covering the daily ATR in a very short amount of time is worth paying attention to. So this is a tool that you could also use to place stops, because one thing that happens is traders will place stops. Let's say you're taking a trade off of the 1-hour chart, you're taking an intraday trade, and you're thinking, well, now I'm just going to incorporate this low into my stop. And I'm just going to place my stop slightly outside of, maybe within this wick or slightly outside of this low right here. What you should be doing is incorporating volatility. So what I should be doing is, if I'm placing a stop and I'm taking this trade, not only just consider the swing low right here, but consider what the normal ATR was over this course of time. So for example, the normal ATR right now is right over the average true range, not normal ATR. The average true range right now is around $40 when I'm looking at the 1-hour chart. So what I should be doing is I should be placing my stop at least $40 outside of that value, or outside of the value of the last swing low. What this just allows for is the normal behavior of price movement that could happen to come into that level and not stop me out. So it's a matter of protecting ourselves from what would be expected volatility for the day. Okay, you don't want to be stopped out of something because you're placing a stop that is within what is considered normal daily volatility. So that is the ATR, and I think that is a very useful tool. The next thing I want to talk about is Tezos. This is an asset that I think is going to be performing exceptionally well for a few reasons. One, it is holding this weekly swing high close. So we're looking at the weekly chart. This is Tezos on Binance. This is the weekly swing high. So when we take this away for a second, this is the weekly swing high that we established, that we've now just broken through, and it is holding as support. So what we saw with Link is the same thing. We saw Link break above its weekly swing high. So if we just go back to Link, we saw Link break above its weekly swing high, and it had a good amount of continuation for Link. That was already an all-time high. Link and Tezos are highly correlated. I think that as long as Tezos holds over 290, and we're seeing strong price action already, as long as Tezos holds over 290 and establishes strong structure here, we should be on to new highs for Tezos as well. So Tezos is something that I'm going to be paying a lot of attention to. I actually bought Tezos a little while ago, and I'm going to be holding it for probably the foreseeable future. Again, it's highly correlated to Link. I think that no matter what Bitcoin does, Tezos is likely to be outperforming in the near future. It's putting in bullish market structure. There is a strong correlation, and Link is not likely to turn around right away either way. The last thing I want to go into before we pick the lucky winner is what I posted on Twitter. Make sure that you follow us on Twitter. I'm going to be hosting a free live trading webinar or workshop on July 29th. So all you have to do is follow me on Twitter, leave me a direct message, tell me you want to be incorporated into this or included in this, and I will go ahead and update you as soon as we get a little bit closer to that date. It's going to be completely free. As you can see, we're going to be going over mapping the environment, identifying opportunities, understanding context, managing risk, and managing emotion. So things that I think are really important to build a framework, regardless of what experience level you come from. So make sure that you go ahead and leave me a message on Twitter. All right, this is, again, completely free. The last thing we're going to do is pick the lucky winner from this video. So we have the URL. So go ahead and select that, copy, and we will pick a winner. Go to YouTube comments, get YouTube comments rather. Okay, 296 comments, and the winner is, it is Tamia Lolicia. I hope I pronounced that correctly. So Tamia Lolicia, you just won $100 in Bitcoin. So we're going to go ahead and reach out to you. All you have to do is give us your Bitcoin address, and we're going to go ahead and send that over as soon as possible. And that covers it, guys. So ATR, Tezos, which I think is going to be performing exceptionally well in the near future, as long as Bitcoin completely doesn't just fall off a cliff. And then make sure that you sign up for the free trading workshop on July 29th. That's that, guys. As always, exercise proper risk management and trade effectively.